Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, September the 6th, 2023. Well, the markets did end up paying attention to a little bit of selling today. And of course, as I read the news wires, which I always get the headlines up here, you can see, I just ran one across is that big tech tumbles as rates rise. And as I was speaking yesterday, that about an article about how the equity markets are out of sync with the interest rate markets, with the treasuries, with bond market, and how I had mentioned it's like, no, it's the other way around. And today that proved to be kind of in line. Now, also yesterday, I can't forget that it just was the influx of the new money coming in at the start of the month. So eventually, I think that what we get is people catch on. People realize like, oh, I'm not going to do that. But a lot of people do feel that's the best place that they can put their money in to put it to work. So regardless of that, but that's what was yesterday. And then today was just, okay, now we're going to play catch up because of where the markets were headed. And again, the rates or the yields on the 30-year bond and the 10-year note, the 5-year note and the 2-year note continue to go up, continue to climb higher. And they did actually yesterday, even with the treasury markets, doing a little bit of a bounce. So that being what it is, I'm going to start here on the NASDAQ. Now, I have been talking for a while on how, and here's the 4-hour chart, but I've been talking for a while how it's been rather difficult to kind of count all this. And today I took off the internals because if I open this up anymore, it just groups them all together and it's harder to see. But I had at one point left the 3 up here, the small 3, 3 of C up here, and put this as a 4. And then today it just kind of dropped down out of that, broke the 50, broke the 200s, came down and touched that on an hourly basis. It touched the 200 EMA. On the 4-hour, came down very close to it. Now, granted, it did not come down and it has not broken below what would be labeled as wave 1 of C. But the whole presentation, the whole market began to turn hard, and we got in getting some follow through today. And so it was actually the breaks here. So what it ends up, and again, I had put this out, just not actually used it in updating the count. But in my mind, I even think I discussed that it could be a nesting 1, 2, 1, 2. And really what the problem is, I'm going to drop down to the hourly chart so I can show you that this was looking like it was 3, right? 3 down. And now you're going to see that I'm labeling it 1. And so what I'm going to do is open that up. And I want us to go in there and look at this. So 1, 2, 3. And then what the give is that's Friday. Then we go into our long holiday weekend. So it's just this elongated, just kind of a little bit move higher. And then when we finally come back in on Tuesday, so we start to go down on Monday, still Globex, no volume. And then Tuesday, we make that low. And it was Tuesday during the Globex. So by the time we restarted yesterday, the market decided to rally, reached a peak, and then just started to decline again. But again, this was the give. It's like, well, what's it doing? 1, 2, 1, 2. And it is 1, 2, 1, 2, 1, 2. So it's a bunch of 1, 2, 1, 2s. And that, again, I as one of the subscribers to the channel, very astutely, I love it that you guys keep me in line, because you remind me of my own self. in terms of, well, this is what I'm looking for. And so when we're dropping in a third, it would be very common for it to do what we call nesting 1, 2. So it's like a 1, 2, 1, 2, 1, 2. And that sometimes I'll put it all out there as such, but oftentimes I won't, because often I've gone to 1, 2, 1, 2, 1, 2, and then it turns into something different. So, but it is true. And I want to thank the subscribers that just kind of, bring that in. Hey, this is what I've always looked for, and this is what I think it should, look like, because it fits. And I appreciate that, because I oftentimes want to put it out there, but I don't want to be confusing in what I'm talking about. So, and in any case, here we are. And let me just bring this back in and bring it back down so we can show that here we have minor wave 1, ABC, minor wave 2, and this, it does fit. And then we have 1. So this is 1, 2, 3. This whole thing was a 4, and then we got the 5, and we get the 1. So we had 1, 2, 3 down to here, and then a 4 and a 5, and then it becomes minute 1. ABC, minute wave 2. Now we're dropping again, and what I'm thinking is going to be the third, minute 3, but we're inside of a minor third. So we're kind of sort of pushing into 3 of 3. And the only thing that would interrupt that is if I drop this down to minuet. Then it's just, we're working on minute wave 1 of minor wave 3. So again, this is just the start of the count, and we know we can make adjustments on degree. More important is to what is actually we believe is going to start happening. So what I've also put in now here is, this is for the minor third. So we've got all that. And minor 3 would be equal to minor wave 1 at 14,207, 208. Now, again, remembering that within a third wave, whether it's minor, intermediate, minute, third waves are normally out of the sequence of 1, 3, 5, right, are the longest and the strongest. And the reason that they are is because they subdivide. And they subdivide more than once. So we get that nesting 1, 2, 1, 2. So that would tell me that 100%, yep, it could be. But I'm going to be looking for 1.618. I'm leaving a lot of things in between out of this, because I could fill it in, and I'll show you how. I could fill in saying 382.5, 1, and those aren't applicable, and these are too far down. But you can put that in, and then you're going to get, these should be support levels where the market may find support to do a bounce. But in essence of the whole play, I'm looking for something much greater, so I'm leaving them out. I will use them in response to if we're going to be doing a bounce or a corrective phase where 0.236, 0.382, 0.5 come into play. Then of course you're going to add them, but not when I'm looking for this decline and it's going to be larger, to cloud it up by saying, well, we got support up here. No, in fact, the 618 support, I would fully intend to think is going to get broken. I'm just talking about possibility if this is within this minor third, this could be where, very possibly where minuet wave 3 might come in. But then I would have to break it back down and call it minuets, because there's within minor 3, there are 5 waves of minute degree. And I'm going to say 5 waves got to get us down to here, or somewhere below all this. So again, I'm just labeling it this way. That degree may change, okay? So let's add one additional now, and it's going to be 4. If this is we're getting a 1, 2, then this is going to be a 3. So we can do the same thing, right? But we're just doing it on a smaller degree. and we're going to go there, and we're going to go to here. And so here we have, again, where the 15,192. So you can see how I'm going to drop this degree. And it just is going to be necessary because it'll play out too quickly. So I'm going to do that now. So while I have it in my mind, otherwise we'll likely get into trouble in a day or two if this all plays out as I suspect. So just to kind of make it all not necessarily legit, but we're just going to kind of stick it in there. So 1, 2, and then it's a 1, 2. So again, we can continue to add fibs, and I would do that, but I don't want to cloud up the screen just yet. So within this, we're looking at least dropping another 200, maybe more, right? Longest and the strongest could pull this all down to 2.618. And we have additionals that I can fit in between, but we're going to let this unfold a little bit and see what we can come up with. So again, I move down and I kind of go to, these lower levels, and I can get the internals in here because this is what I think it'd be, 1, 2. So we get a 1, 2, then a 1, 2, then a 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of 1. So again, I do think that on the minute degree, we're just in that first wave of the minor. So it's minor wave 3, but we're working through minute wave 1 of minor 3. And then we got a good decline ahead of us, if indeed this is what it is. What the alternate would be, hard to say, but you can see just from the chart, it's going to look like it even a little bit larger, but still ABC. It's still 1, 2, 3, ABC. So we get another decline, and then we start to rally. I mean, at one point, they came off real clean, really nice, and then they just start to buy it again. And the buys are pretty strong. I mean, they start moving back in. That's how they started the day. Don't forget that they started the day up here, about 15,500. And we ended the day at 15,036, and that's after we got down to 15,308 or 310. So it definitely was a 200-point move high to low. And then they bought it back up at the end of the day. Not as much as you would think that they could, but they did. Okay, moving averages. Also, what contributed to the change and the finishing that minor 2 was the break of the 200, the 30-minute, and then again, let me go one out, the break of the 200 EMA, and actually the SMA. It popped back above both, but it did break, and we got another decent slam dunk. And then they rallied it back above to finish above both. So we're going to see how this all plays out. Again, I'd be looking for additional downside. So, and these are the initial support levels. Now, because of this, we don't have much. We have this price support, which got broken and then got retaken again today. And we don't really have that price support until we start getting down here. So we have fib support before we have the price support. You might find some here, you might find some here. We did actually there, and that corresponds with this area right in here. But that's a stretch. To me, that would be a stretch, but seemed to have worked. So there's not a lot of support because the rally was very strong. And again, if we're going to start out unwinding all of this, what I might consider as excess in the tech stocks, I mean, Apple took a good little smack in the face today, recovered some into the close, but there were points that it was down $8. There were points again in NVIDIA being down $15, $16, $17, $18. So the fluff starts to come out, and we start to see the positions changing. We start to see things happening, and in 0 DTE, we get a lot of gamma flow. We get a lot of movement in that respect as well. Okay, over in the S&P, a little bit different, but cleaner in that where it's a nesting. Okay, so here as well, I gave it the benefit of the doubt, leaving this possibly as a 3. But I moved it, and this is 1, 2, 1, 2. So I gave that, I could put that 4 there, the minute down to here, giving you the opportunity. It looked like it was going to go, and then it failed. Failed here. See if we gave it a little bit like, okay, you could drop, finish this small little whatever, and then rally, and it didn't. It just kept breaking down. Here again, 1 hour 200, the 200 period, hourly 200, EMA and SMA broke, and it closed well below them. That was another factor that I was like, nope, minor wave 2 is done, and we are dropping. And here, unlike the NASDAQ, we came down and touched that level. This high, if this is indeed where the completion point for this small minuet wave 1 is, of that C wave going up, that was for 44.47. This low was 44.47. So it touched it. And I was talking about yesterday, if it starts to break 44.50, we're going to start getting stronger confirmation that, okay, that's done, and we're into the next sequence, which is a minor third. Well, it came down and it touched it and bounced right off of it. And I thought, oh, tricky, tricky, tricky. So, but I went ahead and I made my changes anyway. So what are our expectations? Let's start to build up our fibs here in the S&P now as well. So I'm going to go out to the 4 hour. And let me just open this up so I can get my levels. We're doing extensions. And we're going to go from this level. We're going to go from this level. We'll make them equal. Down to here, up to here. So what do we got going on? Well, we have the 618 here. The minor 3 would equal minor 1 at 42.64. But the 1618 comes in down here at 40.89. Now, again, remember on this larger level, we're working through a minor degree 5 waves down to complete intermediate wave 1 of primary wave C. Same thing over in the NASDAQ. So we're just working through this intermediate wave 1. So 40.89, and then we get another bounce. So it's going to be a longer process is actually the underlying meaning of my statement. The process is going to take longer than what I think most people are going to anticipate. And I know we got the Fed coming up, and I know what the narrative is because I listen and I hear it just as often as you guys do on that. Well, you know, what we're leaning on is that the Fed's going to pause, but we still have one more rate hike, you know, hanging over our heads, moving into the fourth quarter. But if you're looking at those interest rates, or if you're looking at the Treasury market, it's like, they're not acting as if we're going to pause. Now, granted, there's an oversupply, and I think that people just don't want them anymore. They're just they're rotating out of a lot of bonds, and new bonds are coming in. So, you know, a lot of things kind of get readjusted within there, because the 30-year bond future is not just one bond issue. They're tranches. It's bunches of them, and that is the same for all the others as well, because these auctions are ongoing. But I think what also kind of contributed today was the ISM number that came out this morning, kind of tossed everybody's cookies a little bit. I'm really kind of put the emphasis on, you know, it's still we're still in this higher inflation atmosphere, and just whether we really want to hold on to a narrative like, look, those interest rates, this is enough. They're kind of done with that cycle, don't you think? And we get a lot of economists who are going to say absolutely yes, and we're, you know, happy days are here again, and et cetera, et cetera. And then of course something like this happens, and we'll see all that narrative change yet again. But what if they stop and they turn this and they start to take it higher again? Then we're going to be looking over at that. Unfortunately, folks, we'd have to go over and look again at the alternate. Now, I'm not real pleased. I'm just going to talk about it here for a second. You know, if this is a 4, then what's happening is, what is this then? 1, 2, 3, 4. Look what happened. So I'm about ready to switch this out as well, because we have an overlap. But is this 1, 2, 3, 4, and it's going to form a diagonal, which is kind of strange because it really isn't. But we're going to give every single benefit of the doubt that we can to nail this down to no or yes. So I haven't changed it yet, but I'm teetering to like, nah. You know, my preferred count remains my preferred count. I'm not flipping it over. And now we're getting a little bit of confirmation of that being the case. So what can we look for tomorrow in terms of numbers? Well, our normal Thursday, we have initial jobless claims, 8:30 a.m. Eastern. U.S. productivity, those are revised. Unit labor costs, those are revised for the second quarters. Those all come out at 8:30 a.m. Eastern. And then we get the lineup of all the Fed presidents. The Philly, the Chicago, the New York, the Atlanta, and the Dallas, all speaking at various times tomorrow. I really do think that the market is going to hang on the words that wherever they talk, the news will be reported, and algorithms will be scouring for keywords that are going to be said. So from 9 a.m. until 7 p.m., we got them all talking. So a lot can be happening from 9 until 3:30 is when we got 1, 2, 3, 4, 3 at least, 4 starting, all before the close. So we'll see. We'll see. Could be an interesting day. But if we get continued confirmation in terms of initial jobless claims, how those work out, those revised numbers, how they kind of come out. And again, we'll see. We'll see how the market wants to react. We'll see what it wants to do. We could see the follow through. I would anticipate that we're likely going to see follow through. I don't think that we should get this like, okay, they're just going to, that was it, and we're just going to buy it all back. But can you definitively say that that won't happen? I cannot. That's not what I'm looking for. So those are my levels there. Let's go back down to the hourly chart, see about adding one additional. And that's going to be the 1, 2. So we're going to be looking for here. And I can nest with it, right? So I don't want to clog up my chart, but you can do this yourself to see that. And then I can do it again. Right there. And you see we start to get little pairs up here. So we got close to this internal third, right? 44.41. Then we got this third, 44.25. So we're not necessarily going to just start crashing. It's going to stair-step its way down. But eventually, we will. 618 is for minor 3. But that could just be our support level to complete this internal minute 3. And again, I don't know if I need to chop this up. And this is like minuet 1, minuet 2. And now we're doing the subdivisions inside of it, which would push this down even further. Now, one more that I want to add, I think I may have put it in. I did here. This is the primary C wave. 100% where wave C is going to be equal to wave A is 33.28. So that one's important. Then I also have another that comes in at 29.80, and that's the big one. That is where this decline would equal 382 of all of super cycle wave 3. And that, my friends, goes from on the SPX, right? Because I have to go to the cash market. It goes from 1932 to 2022. So that entire rally phase, 0.382 is 2980. So if you don't think that that one's going to come into play, think again. It's going to come into big time play. And that is actually where, and now we're talking big picture, that is where I think we might get cycle wave A to bottom. All right. We're finishing up primary A, primary B, primary C to bump it up one to complete cycle wave A. So we're looking at this down here. We have 33.28. We have some at 32. I haven't worked it out quite yet. And then we have 29.80. So it's a nice cluster. And folks, it's not the end of the world. I know we're sitting at 44.69, but you know, this was 3,500. And so with C wave coming down, it's still not the end of the world. We can go back over here and we can look at, you know, I got to go out one more. Sorry. This was the pandemic. Pandemic went from 33.78 down to 21. And it did it in 3 weeks. So these are not unrealistic. Market can do a lot. Market can really get hammered and survive. So again, don't say never. It's like, I would never say never that we couldn't turn and actually do go up and make a new high above 46.34. That actually is still out there. I cannot confirm and crumple up in a piece of paper and throw in the trash bin that could not ever happen. All right, I'm going to kind of end it right there. Next update, Thursday, September the 7th.